Dabur reported its Q1FY21 numbers and they're largely in line with the ET Now expectations. Let's have a quick look at the numbers. Talking about the revenue of the company, that's declined by 11.5% on a year-on-year basis and stands at 1,979 crores. While the profits of the company have declined by 6% and they come in at 341 crores for the quarter. Margins, they are seeing a slight positive sign over there as the margins have seen a 60 basis points expansion and they come in at 21% versus 20.4% on a year-on-year basis. Domestic volume growth, very important number for FMCG companies. So this time around, the domestic volume growth has seen a decline of 9.7%. We were expecting a decline of 12%. So it's better than what we were expecting, but still a decline for the company. And let's not forget, this is the second consecutive quarter that the company is seeing a decline in volume growth, but sequentially we are seeing an improvement because last time it was 14.6% in Q4. Now it's 9.7%, and let's hope that things turn out well for the company going ahead as well. Let's talk about the segments and what has impacted the revenue of the company. Obviously, the home and personal care business, that has not seen a good growth this time around. That's not what is attracting the consumers. That's seen a decline of around 14.9% on a year-on-year basis. Even surprisingly, the food business of the company, that's seen a decline on a year-on-year basis of 34%. But the silver lining for the company is the healthcare business, the healthcare segment. That is something that's seen a very good growth, strong growth of 29.2%. What's leading the growth in the healthcare business is going to be Chyawanprash and Honey, the two major things which have been the immunity boosters, as well as consumers are surely attracted to these two products right now. Health and hygiene is the focus of the consumers, and Chyawanprash saw a 7-fold growth. That's 700% growth, while even Honey saw more than 60% growth. So that is surely showing how much consumers are focusing on these products, and a very positive sign for the company. That's what is aiding the healthcare business of the company, healthcare segment of the company. So that is surely showing a positive sign over there. Now, talking about the margins of the company, yes, they have seen a 60 basis point expansion, and that's mainly overall aided by the cost cut measures, as well as the ad spends which have reduced by the company. They have declined a lot. So that is something that is aiding the margins and keeping the margins on a positive side, and that's why a 21% margin versus a 22.4% on a year-on-year basis. Now, international business of the company is also impacted. That's mainly due to the COVID-19 situation, if you go to see, and the lockdowns that have also impacted the overall international revenue of the business of the company. Now, talking about the international revenue, if you go to see, the MENA was impacted due to COVID situation as well as macro headwinds, but and Egypt also saw a sharp double-digit decline. But Bangladesh was something that saw a positive sign and saw a growth of 14%. And that is something very, we are interesting. We are seeing in a couple of other FMCG companies also that Bangladesh has managed to perform better than other countries where they have their international business. So all in all, if you go to see from Dabur, this time it's a decent set of numbers. It is what we were expecting. Yes, this is obviously a tough quarter for all companies, but they are showing signs of improvement on a sequential basis, and we'll keep a close eye on how the management's commentary actually turns out now.